Raamdeo Agrawal, A. Bala, and in seconds from now, Sunil Singhania, they also would be joining us, the three wise men, like I always call them. They are there live on this budget day on your favorite channel, ET Now. Raamdeo ji, good morning. Let me start with you first. In the overall scheme of things, for an investor like you, budget will not change anything. But given that last year budget changed the dynamics of the thought process of government's thinking, what are you likely to see? I'm asking you this question because last budget re-rated the market.
Yeah, I think in last 12 months, two, three things have, particularly in the corporate profitability side, it has been a huge surprise. The pace at which corporate earnings recovered post second round of pandemic, that is quite stunning. And that momentum is on. And hopefully with the credit expansion and credit cost contraction, I think financial sector should be leading the pack. And second, that is the largest sector. Second largest is IT. And IT in any case is booming. So you have a lot of fireworks out there. And particularly if expected GDP growth is about 8.5%, doesn't matter from which sector it comes. But in aggregate, if we get about 8.5% kind of thing, I think corporate profits will just boom. And that is where my focus is. Which way the aggregate corporate profits are going. The sectors, post-budget, we can figure out where the tailwind becomes stronger or the new tailwind starts. But just getting that 8.5%, what are the assumptions? Because a lot of assumptions may go haywire, like say, assumption on oil price, assumption on your own inflation. So those things which is not in their control. But I think broadly, if we are able to achieve even with a higher inflation of 6%, 8% kind of thing, 14% nominal GDP growth rate, I think there's a lot for the good corporates.
Sunil, good morning to you. Thank you for joining us. Always look forward to your thoughts on the budget day, especially Sunil. Let's go to a budget heat map. Stocks where we feel that there could be some budget action and policy reaction. Real estate stocks, clean hydrogen companies, EV companies, obviously hospitality, hotel, these stocks would be in demand in terms of where the market positioning would be. Trying to address the trader here. That's one important heat map which in a sense would tell us which way the market mood is moving. And there you go, you got Indian hotels, something could come for real estate, for the hospitality industry. Let's look at DLF. See, these are some of the stocks where you may actually see some action coming in. Real estate could be a force multiplier sector, so to speak. I want to also look at some possible government disinvestment names. Shipping Corporation, BML, what is happening to Container Corporation, IDBI Bank. Remember, these are not new names. These are names where the intention to privatize and intention to sale has already happened. Now, we can endlessly get into this argument and say, "Arey, this all nothing happened." Yes, nothing happened. But Air India happened. And more than disinvestment, strategic privatization, if it happens, it just changes the dynamics of the sector. Raamdeo ji, let's look at a scenario which is more like a realistic scenario, that this is a no-harm budget. Nothing detrimental, incremental positive, nothing big bang, but the direction remains very clear. Do you think markets post this event, risk is behind us, could stabilize?
Risk to the market is the global. I mean, what happens in US, what happens to the global inflation, commodity prices, and the behavior of the FIs. So it is not the trouble. I don't see, worthwhile trouble here. Because fiscal space is so big. We have used the monetary space. Fiscal is now going to be used because you'll have a bumper tax collection, you have 6.5% fiscal deficit, unprecedented amount of money in the hands of finance minister. So I don't think there will be penny pinching on any sector. Now, who gets the big one? That we have to see in the course of the day. But the risk to the market is maybe 2 years rally which has happened. So there is a lot of profit booking. Second is I think FI which owns almost quarter of the market. What is their behavior? They are dependent not so much individually on India. Of course, at some point of time, corporate profit growth will turn their mind also. But if there is a global sell-off, I don't think we'll be spared. So that's the only risk I see. Otherwise, we are going to have good profit growth.